Gold is in profit-taking mode after last week's stellar rally, which saw the precious metal enjoy its best week in 11 years. Nonetheless, it's still managing to remain above key support at $1,600 an ounce. So can the gains for gold continue? With me to discuss is Daniel Lacalle, chief economist at Tressis. Daniel, great to speak to you. Let's start off with gold before we get into the wider complex. What's behind the recent turnaround that we've been seeing? Talk us through some of the supply and demand dynamics.
I think that we have seen a sell-off that has been predominantly technical. Gold has been a very good hedge for many investors in an environment in which equities and bonds were hugely correlated. And as such, when the collapse in equity and bond markets started, many actually had to unwind both the longs and the hedges on the long side as well that they had, therefore creating a sell-off.
In terms of levels, what sort of targets are you looking at for gold? What are the levels that we should be eyeing in the months ahead, do you think?
I think that there's a very strong support level at 1450. I think that anywhere between 1450 and 1550 is a very good buying territory in terms of not losing the trend, the positive trend of gold. I think that in any case, it's a buy on weakness commodity, certainly.
And in terms of its safe haven status, it's been interesting to see that when we had that big market sell-off, gold declined as well. And last week, when we saw risk-on sentiment, gold seemed to rally. So do you think that it still has its safe haven status? What do you make of its recent correlation with risk?
Well, I think that in the recent weeks, what we have seen is a lot of impact coming from unwinding of positions. And therefore, the causality of the moves and the correlations are very spurious. So we have to be quite at least aware of the fact that what we have seen in the last couple of weeks is a lot of noise and panic. However, if you look at the longer term trend, I think that it's very clear that gold is one of the very few assets in which you have a strong level of decorrelation with the other risky assets, predominantly equities and bonds, and as such, it works very, very well in a longer period. So we need to sort of expand the time frame of our analysis and look at what happened already in 2019 and 2018.
Yeah, I was wondering if you pay much attention to the gold-silver ratio. Is that about 114 at the moment? I think the all-time high was about 125 that we saw earlier in the month. Is this a function of what's happening in terms of gold versus silver mining? And kind of what can we learn about the potential opportunities in either precious metal?
I think that if you are bullish on gold, you have to be bullish on silver. But I think that if you're bullish on gold, you don't have to be bullish on silver because of the same things. Because gold is helped by the fact that central banks are buying a lot of it for their reserves. Gold is helped as well by a very, very tight supply-demand scenario with mines shutting down, etc. In the case of silver, those aggressive improvements in the bullish segment of the supply-demand scenario are not as radical as in gold. But again, we're coming back to the same point, is that you need to be probably accumulating on silver right now precisely because it continues to provide a decorrelation factor and as well a reserve of value factor in an environment like the one that we're living today of extreme volatility. Reserve of value is important, and silver and gold have the same level of strength in that particular let's say that particular factor.
Well, do you remain bullish for the outlook for silver? Because obviously it's more of an industrial metal than gold. I mean, doesn't that make it more exposed to the coronavirus, though, given that industry is effectively at a standstill?
It is, absolutely it is. But what I think is important is to understand that what is behind the concerns of the coronavirus and its impact. The first one is that there might be a very prolonged depression. That might affect the industrial component of silver and its fundamentals. But you need to pay attention to the other components of the reasons why you buy the silver, which are reserve of value and the fact that it works as a decorrelated asset relative to equities and bonds. So yes, you cannot be as bullish on silver as you would be on gold because of those internal dynamics. But I think it's an important precious metal to keep in a portfolio in which you not only need assets that generate a positive return, you need assets that also keep a certain level of reserve of value in the long term.
All right, let's talk about Palladium as well, because the chart was essentially parabolic before the market sell-off kicked off in February. And even when it did kick off, Palladium managed to eke out a few more sessions of gains. I mean, it was eventually taken down, but it has actually retraced about 60% of the decline now. So is there more upside to come?
I think that there is more upside. The supply-demand scenario in Palladium is very, very bullish for price, very bullish. I think that there is a risk that because it's been a phenomenal metal to have in the portfolio, many investors might decide to unwind positions, take profits in a sort of 2008, 2009 way, in which what you see suddenly is an abrupt sell-off in the assets that have generated a strong profit and that remain in the plus side of a portfolio. However, I think that the supply-demand scenario is extremely bullish, and if we think of a V-shaped recovery, and that things will go back to normal, Palladium there stands at the forefront of those metals in which we don't need to sort of bet on an aggressive recovery of demand, because that demand is very, very stable and supply is scarce.
And I assume your outlook isn't for a V-shaped recovery.
And unfortunately, it looks like the economy, which was predominantly kept alive in 2019 and 2018 by the services sector, because manufacturing was already in contraction, it is extremely difficult to believe that we will see a V-shaped recovery and the figures of services sector growth that we saw in 2019, because there is likely to be a change of pattern in consumption trends, but there's also likely to be a wave of financial and credit events that will be difficult to, at the same time, address with an improvement in credit for investment.
All right, Daniel, thank you so much for your time.
Thank you very much, and stay safe.
You too. That was Daniel Lacalle, Chief Economist at Tressis. I'm Victoria Scholar, and thank you for watching IGTV.